Walt, the capital markets are open. Tesla stocks rallying on the back of autonomy. WeRide raised $440 million in Nasdaq on an IPO. Horizon Robotics raised $696 million in Hong Kong, the largest IPO of the year for Hong Kong. And Waymo, wow, oh, wow, just announced a fundraising round of $5 billion in a round led by Alphabet. Then it's Tesla. We always start with Tesla. Elon's controlling the narrative in autonomy and politics. Is Tesla now on the road back to growth, and will that growth continue to fund his political ambitions?
Well, look, the stock was up big yesterday, bigly, 20%. I think the markets are just opening now. It's piling on some additional returns. A lot of it obviously was with what was going on in the gross margins and the outlook for equipment sales. But look, the call was certainly dominated by talk of robotaxis and autonomy. There wasn't a ton of new information relative to what was discussed at the event, although Elon did comment on something that we've debated here many times in terms of the importance of perhaps a federal framework, which is, interesting given his role and the upcoming election, which is, we're only a week or two away from. Just what were your thoughts on those comments?
We're 10 days away from the presidential election. If you look at the betting markets, you look at the New York Times polling today, the race is tied. But if you look at early voting, there is a very good chance, I believe that we're over 50% chance, I'll go on the record and say 60% chance that President Trump will win the presidential election. When they call it, that's a different conversation for a different podcast, but I'll give it a 60% chance he wins. If he does win, I'm hearing from individuals who worked in the first Trump administration that are actively discussing appointments that autonomous vehicles will be a priority of the Trump administration. The big question that they have and I have is, how will President Trump balance labor and the desires of Elon Musk? Mr. Musk has contributed over $150 million to President Trump's campaign. The union hasn't nearly contributed that. So perhaps in the first year and a half, we can get a national framework. And if we do get a national framework, Walt, what does that do to the street? Do we see even more money pour into this now that there is a regulatory framework and I'll use the term regulatory certainty?
100%. When you reduce uncertainty, there's more interest by the financial community. Now, clearly, regulatory is not the only issue, but it's been a primary risk factor and something that many people think limits some of the growth potential. Just look in California as an example. I firmly believe that Waymo could easily take riders to the airport, wherever you put the drop-off spot. That I don't think is limited by the technical capabilities of Waymo, but the regulatory framework there. So I think when you remove that, then your growth models improve. But there's still, these companies still actually have to develop the technology and not have major events that scare consumers and regulators from allowing them to continue to proceed. And I don't know if we talked about this in the last podcast or when time's kind of a blur, but I think there was some news that came out about Tesla perhaps in Palo Alto doing a Robotaxi. I'm not sure whether that one, I didn't really look into that. Was that a supervised thing? And do you think, is that a positive or a negative? Like, is Tesla even ready to do even a very limited robotaxi trial in any market?
It's a positive. What Tesla's done at the anti-Uber way, the anti-Travis way of Uber. They're engaging. It is in a city meeting with city documents from the city of Palo Alto, where the city of Palo Alto reached out to Tesla to explore doing a rideshare service because of the cost of public transportation. They're looking to save costs and to deploy this technology. And I think it's a very good thing because if you look at individuals that take public transportation, they want one thing more than anything. They want point to point. They don't want to have to wait 15 minutes at a bus to transfer. They want to go point to point. And if you look at the economics of public transportation, it's highly inefficient. Even in New York City, we look at that, it's highly inefficient. What Tesla's offering is the city of Palo Alto a very efficient way to run public transportation, creating a lot of value for the residents of Palo Alto. From a technology standpoint, do I believe FSD supervised is ready to go unsupervised? No. When I say that, though, I drove my wife to the airport this morning, not one intervention. So it's close, and I'm still sticking to my 2030 unsupervised timeline, but it's a very positive step in the right direction for Tesla and a positive step for the city of Palo Alto as they look to cost the obscene amount of money they spend on public transportation, costing taxpayer dollars.
The pushback I would have is you could offer point-to-point just through Uber. You don't necessarily need Tesla there. And the question, I guess, is that trial going to be supervised or unsupervised? If it's unsupervised, I don't think the technology is ready. If for whatever reason Palo Alto does, and there is a unfortunate and fatal accident in that market, that's going to set not only Tesla back, but potentially the entire industry. So I would guess, maybe even hope, that Palo Alto has it as a supervised basis. But any info on that that you're aware of?
There's been no filings from the city council or the city manager as it relates to supervised versus unsupervised. I agree. I hope it would be a supervised service. That's what we hope for. We don't have any public filings, but I would hope for that because you're right. If there is an incident, you're going to have national headlines. Then California will use that to crack down on autonomy and perhaps shut Tesla down entirely in the state. If California took that regulatory action, would Tesla be forced to shut off FSD in California? Because currently the way that FSD is regulated in California is a level 2 system, not a level 4 system. And if they're saying unsupervised is 4, then you're going to get in this murky area around regulatory. So it's going to be a fine dance that Tesla's going to have to do.
Look, the other part that I think was interesting to me, I, on the previous podcast, said that everyone was watching the WeRobot event. Maybe that wasn't true because a lot of the things that Elon was talking about on the earnings call were basically just a rehash of WeRobot. I don't think there was anything. But I did get a lot of incremental inbounds in terms of the autonomy element of that. So I think that was also contributed to a bit of the hype. It was also, I think, interesting at the end, Adam Jonas had asked a question about basically XAI. And I don't think Elon fully appreciated what Adam was asking and what the concern is that there is among some investors, although maybe fewer now that the stock's been rallying. And the issue is ownership, meaning what Elon owns in Tesla. And I know his wealth went up, whatever, 20, 30 billion, whatever the number was, but what he owns at X and other companies. And if the brains, the technology, the AI that's being used to power autonomy at Tesla resides within X as opposed to the AI within Tesla, then there might be some incremental risk. And I think that's something that comes to mind. I think Elon didn't really fully get it and in terms of what Adam was asking, because he was asking it. I'm more of a direct person. When I ask the question, then I'll follow up and be like, no, that's not what I was asking. That's not Adam's gig. But I think even the way Elon answered it, he's like, well, obviously a lot of the smarts for how autonomy works is going to be within Tesla. So I think he answered it in a way where the value of the intelligence of AI will remain at Tesla. But that's something to kind of, in terms of how we're looking at this from the investor world, always something to consider when you have a controlling owner in where they move those different asset pieces within the variety of companies that they have, so that as an investor, you extract the most value when these things do finally hit.
Good point. I don't necessarily view it as a risk at this stage. Perhaps I might view it as a risk later, but I feel that the way that both companies are performing, I don't view it as a risk. And look at risk standpoint. Everybody said it was risky to buy Twitter. Now it's looking like that was a brilliant decision. Then they said it was risky to get rid of the Twitter name. Nobody talks about Twitter. They all call it X. So he's essentially de-risking along the way. I don't really see a risk because if you look at the management and the amount of shareholder value he's created, just look at SpaceX. And I got to give a shout out to the Lightshed podcast because you have a great thing called Telco Corner. So if you like podcasts, I highly recommend listening to the Lightshed podcast and tune into Walt's Telco Corner section of the podcast. But look at SpaceX. Look at the amount of money that he's created with SpaceX. Then you have Starlink inside of SpaceX. And I'm going to go into Telco Corner here because now I got my telco hat on. Well, do we ever get to a point where if you look at the Elon's intricacies of his companies where SpaceX ever spins out Starlink perhaps as an independent company or an independently publicly traded company?
I don't think so, because I think, if Starlink is truly successful, right, it becomes a free cash flow machine. And then SpaceX's ultimate ambitions are effectively getting to Mars, right? There's like Elon always has, there's broader ambitions. So you ultimately use that cash flow to fund greater ambitions. But again, I don't think the issue is, the issue is like, where does Elon own the greatest equity ownership? And look, he was very perturbed that his compensation was challenged. And I think there were some threats. Like if it's of value to get NVIDIA chips and he can decide, do they go to Tesla or do they go to X or do they go to SpaceX? Or he's deciding where the value in terms of the intelligent rides, if his equity ownership is lower in one of these entities or for whatever reason, courts or investors are challenging him, then that's something that investors just pay attention to, whether you consider it a risk or not. And look, I've dealt with this with companies in the past where, for example, like Charlie Ergen with Dish, there was always concern that he had debt holders that are now getting, not par for this merger that they're having with DirecTV. There was concern that he would sell the wireless spectrum out from underneath them jettison the pay TV business, and then just give the dollars that he made from selling the spectrum to the equity holders. So you as investors, you always look for ways, because it's not like it hasn't happened. I mean, it has happened in the past where people in controlling positions find ways to move value from one entity to the next. Just a little side comment and maybe color to those that didn't really necessarily get what Adam was asking about in that question.
Here's another one that's been top of mind for a lot of our viewers and listeners. National Amusements Paramount. That's another example. That's going to be a fight with Mario Rinaldi there to see he wants to get his value. And Ellison's son saying, not so fast. But that's the markets. And if you're going to invest in these, and all assets are risky, and they come with risk. When you look at risky assets, WeRide went public.
Nice transition. I love that transition.
I'm learning from the best. That's risky. So they raised $440 million on NASDAQ IPO. But we're Autonomy Markets, and Walt, you put on your markets hat and you listen to you watched the roadshow. We actually both watched it. Wow, oh wow, did you uncover? Tell our viewers what you uncovered.
I mean, wow, oh wow is right. Normally, I would say that any type of IPO in the market is positive signal, especially given that this thing has traded up. You know, the IPO I think was $15.50, is traded up $18, $19. So on the surface, like, yes, this is great for capital markets. It underscores the whole point of autonomy markets. Then you do some scratching, you look at the IPO. First off, on the IPO, 83% was basically purchased by Bosch, who is their JV partner on the licensing side of their business. So if you think about it, if you take what's remaining of that IPO times $15.50 a share, the new money in was $20 million. $20 million. So the float on the stock, the amount of stock that's tradable is $20 million. That is not enough for institutional investors, even if they were interested, to play in something like this. Now, you'll read the headlines, Grayson, you'll see 400 million was raised, but 320 of that was a private placement in addition to the IPO portion. That was, they talked about that months ago, back in August. And, a bunch of strategic investors. There's stuff that I've been trying to track down. There's a JSC International Investment Fund, SPC, that put in 69 million. If anyone knows who that is, please let me know. We've been searching. It's like one of these Cayman fronts for somewhere else, and someone's representing that the names that are representing them are Chinese names. So maybe, I don't know who it is. There's other Chinese investment funds. I would guess that anyone in that private part of the investment is probably locked up. So the tradable dollars were very limited.
That smells. I'm looking for Dirty Harry. I want Clint Eastwood to come out and clean up the mess. There's no other way to say it. It just smells. I'm sorry. What's the structure? What's underlying this? Obviously, this smells, but what are the metrics of the company? Is there anything even there? Or is this just a bank robbery? It's a grab and go.
I mean, that was the other kind of wild thing about this is, you look at the revenue, it was down in 2023. In the first 6 months, it's down in 2024. And they're blaming it on the bus industry. This business is segmented into three parts. There's the traditional Robotaxi, then there's buses and street cleaners, and then there's the stuff they're doing with Bosch where they're basically just licensing the technology. So the thing that's down is the buses. The way those contracts are structured is 2/3 of the contract is basically selling the equipment. So think about that. If you're selling equipment, you always have to sell more and more and more every year. This is not like iPhones where someone's going to, well, I guess in this case it is, but they're going to replace these buses perhaps every 5 years. But in order to grow that revenue line, you have to find more people to buy buses and street cleaners. And then meanwhile, on the Robotaxi side of things, they talked about a revenue per Robotaxi that amounted to like $20,000, $21,000 a year per Robotaxi for a Robotaxi that has a life of 5 years. And then when they talked about the margins of this, like every autonomy company, obviously you have these margins that are improving because you're taking out the biggest cost, which is the human cost. But when they were describing the human cost going from X to Y being low, they were saying, well, the remaining human cost is that we have like the supervisor driver somewhere remotely that I guess controls these cars when they're not working. And the ratio of those humans to the number of robotaxis out there was not 100,000, it's not 50,000. It was 10 to 20. Let me look at my notes. 10 to 20. So for every 10 to 20 cars that they have on the road, there's someone assigned to be there for when they, I guess, disengage. Does that scale, Grayson?
No. Do you know what this reminds me of? The Chinese real estate market, what happened with all those apartments. This just smells funny. And at some point, we saw what happened with the Chinese housing market, a huge reckoning, and the Chinese Communist Party had to get out a giant fiscal bazooka to stimulate their economy. And if you're looking at the 10 to 20 per vehicle, that doesn't scale. And that gets into a point. Last year at CES, there was a rumor floating around. WeRide, I was invited in the van. I didn't go, but I was invited, that it was remote controlled. And I have a good friend who went in the vehicle. He said, no, that wasn't autonomous. That was human driven. Is any of their tech truly human driven? If the word coming out of CES last year that the van, as they claimed, was fully autonomous, was human driven? If you're telling me this is 10 to 20, so there's a lot of questions outside the real estate, outside of the teleops. What you're describing to me from a public filing screams teleops company, doesn't scream autonomy company. And Bosch, there's a lot better investments if you want licensing. I can go down a laundry list with you.
Well, they have a commercial agreement, but I hear you, right? There's a variety of companies out there, and maybe there's some investors that are just kind of strategically spreading their dollars in a lot of places. They claim on the bus side of things to have orders for 2,000 more, I don't know whether it's buses or street cleaners, doesn't matter, out of Japan. I don't know, but the 10 to 20, I literally had to go back. I'm like, did I hear that right? Did I miss that? I think people that say like, oh, you have to get rid of that kind of safety person to hop in entirely for it to work. No, that's not true. I mean, there's always going to be a case where you're going to want someone to remote in. But if it's 10 to 20 cars per human, that's not. And by the way, I don't know how that even works, that it reduces your labor costs as much as they were demonstrating on these charts. So look, this is early impressions, right? I mean, I just kind of took a look at the IPO and look at some data. There's obviously a lot more to learn. We look forward to talking to the company and engaging in some dialogue. Hopefully questions get answered, but those brief highlights and how the little amount of incremental dollars that were raised, unfortunately for Autonomy Markets, is not send the strongest of signals. It's great. We have a new ticker up there. It's necessarily performing well, but like when you only have 20 million afloat, it's not going to take much incremental buying on day one of an IPO to move that stock higher.
We got a headline without any substance. Drive-by media, I'll use that term really. It's a drive-by stock listing. I don't know any other way to say it, because if you look at 21,000 per vehicle, Waymo's doing a lot more than that. So that tells me the tech's not there. So you take in the revenue, you multiply in the teleoperating drivers. The technology's not nearly advanced as what it's being advertised as. This is quote unquote the world's most advanced autonomous driving company. Flat out, no.
I don't even understand the strategy in terms of, because the way they were communicating is by saving money, they're passing that along to the consumer. But like, as we've talked about on this podcast, the way autonomy should be positioned is a premium service, which you're charging a premium dollar amount for. It's interesting. Now, did you not want to ride it in CES because of who the company was and you had a fear for your safety, or you just didn't get around to it because you were very busy at CES?
The honest truth is I got invited to a really good cocktail party with great wine.
So that took priority.
That took priority. There was a wine tasting, and so I had to do it.
Look, if this year at CES, whoever wants me to invite them into whatever automobile or drone that they have, I will get in, and I will not prioritize cocktail parties unless there's a new, interesting autonomy one late in the evening that will draw all of the key people of the industry. Then I'm not going anywhere else. But more on that later.
More on that later. There is an announcement coming in early November, but the one thing I did get to experience at CES, I have to say a huge thank you to Goodyear Ventures. I got to go in the blimp up and down the strip. Now that was cool.
Yeah, that would be. I'd like to do the blimp over maybe a football game. Is it Titan style? What's the experience like inside the blimp?
At first, I was nervous because you're just floating. When you get up and walk around, there's no seatbelts. You just get up and walk around. It's really amazing. There is a bathroom.
Cocktails? Was there a little bar up there?
No, cocktails would be great though. I like cocktails.
No smoking, I hope. Right? No smoking.
No, I don't want to go kablooey like the Hindenburg. But I could tell you, and I'll give you a little hint, that the person that controls the blimp will be at that special evening. So perhaps we'll get something arranged for you.
Love it. So Grayson, that was not the only news in terms of capital markets. And again, underscoring why Autonomy Markets exist as a podcast. What else do we have this week?
We had I call it the Friday Waymo dump. It seems Waymo drops their biggest news on Friday. $5.6 billion funding round led by Alphabet. Two interesting things in the press release. The formal press release, so compliance department, this is public, came from Waymo. Chase Coleman, the founder of Tiger Global, gave a statement in the press release, along with the CEO of Silver Lake. Very interesting. You don't really see those two gentlemen doing press releases together along with Alphabet. That to me signals a very bullish sign from the public markets perspective. And 5.6 billion, it's nothing to sneeze at. And this goes as Ruth Port moved into her new role. Maybe perhaps she's getting bullish on Waymo now as the miles ramp up and the revenue ramps up.
It's just, again, first of all, again, dollars going into the space on the heels of the Tesla event from a couple of weeks ago. I don't think that's the driving factor, but certainly there's an appetite there, right? We're seeing questions about it all over the place. I don't know, do we have an update on operationally? A lot of times companies will do fundraisers on operational improvements. They did launch in LA. I don't know if that's been made broadly available other than needing the special code. Is there anything else going on with Waymo more recently?
Los Angeles is still not open to the public. Atlanta has not opened early rider. I stick to my early November, second week of November for Atlanta to open up. An interesting thing in the announcement, they said to fund the expansion. So we're expecting new markets to come online. I still continue to believe that either Nashville and or Miami could be one of the next markets as Waymo continues the Eastern Seaboard. Waymo has surpassed 25 million fully autonomous miles on road. So they're making a lot of progress. And if you're starting to read the reviews, if you read the Waymo subreddit and you read the reviews, you're getting a lot of really positive reviews from riders. Then we're seeing this really interesting trend now in multiple states where parents are putting their kids in Waymos instead of putting them in Ubers because there is no driver. We're seeing that in the San Francisco Bay Area. We're seeing that in Arizona. Even though you have to be 13 years old to ride in a Waymo, the parents are still doing that because they have that fear of driver. Could that fear of driver for parents and for single ladies, could that become a big growth for Waymo since it now is out there in the public?
Sure, that's been a consistent part of our commentary here. In many of the interviews that you've done in Road to Autonomy in terms of that element of autonomy. Not to go back to WeRide, but when I was listening to this IPO and they were talking about how they were passing on savings to the consumer, I'm like, no, you're getting it wrong. Like, it's not about passing savings to the consumer. It's about providing a consistent, clean, and safe experience to the end user. So strategy-wise, I think that's certainly the wrong way to look at it. But so I think, so those were all interesting operational things, but I guess the real answer is, Grayson, in terms of this Waymo capital raise is, look, there's companies getting asked questions about autonomy across the landscape. T-Mobile, one of the companies I cover, always wanting to be a part of whatever happens to be talking about at the time. They'll bring Sam Altman up there. They'll bring Jensen Huang up there. So they have a press release this week talking about how they're partnering with, I forget the name of the company, but use 5G. I think you had commented on my X account, my Twitter account, using 5. Obviously, it's crazy for any, in our opinion, now at least, and perhaps forever, to rely on 5G or any connectivity outside of processing within the vehicle itself for autonomy, but leave it to T-Mobile to be in the conversation flow. Not just because of Elon, although he's a major driver of that, but because of everything that's going on. And so I think they're just raising on the heels of the interest. And even a company like Lucid, I think, is being asked about autonomy. Don't we have some news on that as well?
We do. Peter Olson, the CEO of Lucid, former Tesla executive, in an interview with Semfor said, quote unquote, autonomy is challenging. Yes, autonomy is challenging, as we all seen. Lucid has struggled immensely with autonomy. The same with Rivian. Does this open the door to partnerships? Because it seems that I've said this before, both on the road to autonomy and here, that there's going to be a handful of operating systems very similar to Linux, Apple OS, and Windows. Should Rivian and Lucid go look for partners because the technology is available and put it in these vehicles?
If you're a capital intensive company, right? I mean, Lucid's not generating free cash flow. There's concerns about its ultimate viability. And now the fact that he had to answer that question shows you that that's a question that he's getting. So if you want to appeal to investors right now, and some would argue this is like, don't chase what investors want, just do your thing. And like, I get that. But clearly autonomy, if that was added to part of the Lucid story, they might be able to have some level of incremental capital raising capabilities. So to your point, like, you're not just going to snap your fingers and all of a sudden have an autonomy business. So you'd have to partner with someone. So just like we've talked in past podcasts about Lyft has to go out and partner with some autonomy companies. They're getting the questions. They haven't announced anything, and earnings is coming up in a couple of weeks. They're going to get more questions about that. Lucid should probably look for partnerships. What's the landscape for partnerships out there, Grayson? What are your, who could they do something with to try and get more interest in them? And would whoever they do anything with be something that would be exclusive, or is that impossible right now that no autonomy company would want to do something exclusive with Lucid?
No exclusives. No exclusives for licensing. Lucid's going to have to do a deal, and I could sit here and make a very good economic argument. If it wasn't for Saudi Arabia and the PIF, Lucid would have been bankrupt a long time ago. When you look at licensing for Lucid, the most logical choice, because of the backgrounds, is Tesla FSD. But that relationship between Tesla and Lucid is beyond strained. The bridge has been torched and bombed. I mean, a B-52 bomber destroyed, so that's out of the question.
Even if it weren't, do you think Tesla will ever license to anyone other than itself? Is that the end game for them?
I think they will. But if Tesla did license it, they become the largest autonomy player in the world.
Right. So why? But is it in Elon's makeup to do it?
No, but I believe it makes a lot of sense. But is it in his makeup? No. Is it something I'm going to hold my breath and make a bet on Palo market?
Tesla's stock is up, but it's still the worst performing of the FANGs, off like 50% from its high and whatever. I think maybe still down for the year, maybe not. Oh, no, we're up 6% for the year. Congrats. Imagine he did a licensing deal and people looked at that as an opportunity. I mean, I think investors would look at that as a huge positive, just given the reduced implication of capital intensity.
It's a huge positive. I advocated for this a long time ago when JLR was for sale, before Tata Motors ended up buying it, that Tesla should buy JLR and put their tech in the Range Rover, give Range Rover FSD along with the battery become the best-selling high-end SUV in the world. And I still believe that today was because my daughter brought it up when I'm driving her to school today. I wasn't driving her, the FSD, by the way, no intervention. So Christian, I'll take you for a ride. He's my neighbor. He stopped me yesterday when he was walking his dog because he listens to the podcast here. No intervention. She said, Dad, why can't Tesla buy Range Rover and make it the best car in the world? That gets really interesting. If you take some of those classic models and put FSD in electric, that gets really interesting.
But you're going the opposite way. You're having Tesla buy something that's got a great brand and great product. I'm saying, if you went the opposite way and said, okay, Range Rover, Land, whatever, use our technology, implement it, could be huge, right?
It'd be huge. So if you look at the Range Rover all electric, it's going to price about $140,000 to $145,000 for an HSE base. Okay, if you look at the hybrid, it's pricing around $118,000 to $119,000 base. If you put the Tesla tech and you licensed it, and let's say you raise it to $160,000, the thing's going to sell like gangbusters. Because if you look at the data around the Cybertruck, in Q3, Tesla sold 16,692 Cybertrucks, giving almost a 50% share of the electric EV market. It's in popular culture. And I bring up popular culture because if you remember Nelly, now, baby, down by the whole song about the Range Rover, and Range Rover became synonymous with hip hop and popular culture. The tide is now shifted to Tesla and the Cybertruck. You're seeing it in rap videos for popular culture. If I'm Range Rover, I've got to do something. The baby was sitting there in a Cybertruck on a TikTok post and full FSD bragging how it's the coolest thing in the world. If I'm Range Rover, JLR, or Tata, as a matter of fact, I've got envy. I'm going to try and strike a licensing deal because if I am Tesla at this point, there is no true Tesla SUV, so it's really not a competitor. It's just a moneymaker.
I'm not a huge believer in the Cybertruck. That is an acquired taste, let's call it. So I think there's a broader truck market that's out there. But let's go back to Lucid, because I don't want to lose that point. You were saying that important for them to license and mention that. But so what is the solution ultimately for Lucid?
They're going to have to license it. If you look at, so we covered Tesla. Well, I don't believe that's going to be happening. You have the potential of Pony.ai. They've been very public around exploring licensing. Then you have Neuro, who's emerging as a potential licensing partner. They've been very public about that. They're pivoting to that strategy. Then on the No Priors podcast, the co-CEO Dmitry of Waymo said that at some point they will explore licensing. That's a public statement from the co-CEO of Waymo, so I'm going to throw Waymo into that. You have a handful there. Do they experiment on a closed track and try the different technology, try the different integrations, look at the financials? There's a handful of players to go with the question of what direction is Lucid going to go, because I believe in order for them to, I'll use the Elon term, to crack autonomy, they are going to have to partner.
Yeah, and I think the sooner the better. Again, it's just like Why did WeRide go public? Why is Waymo hitting the market? The time is now to try and at least get you being thought of within that world, because that's, I think, where capital at the moment has interest, and those things can obviously change very quickly.
Another company, which is expanding on this, Wayve from the UK, Alex Kendall's company. Hi, Alex. They raised over $1 billion from SoftBank and Microsoft. They have the capital. They're expanding operations in California. They're testing an L2 plus system, gathering data. No HD mapping as they start to perfect their L4. Could Wayve potentially license it to Lucid? Wayve's whole business model is licensing it, not operating the fleet. That could be interesting. And now here's another interesting thing, and I've noticed this. When you look at the public press photos that Wayve has released in the United States and in the UK, they're operating primarily on Ford Mach-E's. Could a licensing deal potentially be in the works for Ford to license Wayve? It's obviously working on their hardware. That could get very interesting. And that would make Ford's decision to cut Argo not look so bad, because this becomes their backup plan.
It feels like Wayve is, here's the challenge, right? You have a lot of companies in autonomy that there's pressure to get to some level of profitability. You can't just sit here and burn cash forever, develop a business, yada, yada, yada. But at the same time, you have a lot of people investing in the dream of where AI can take you. And Wayve, I think, is an expression of that dream, in that it's an end-to-end solution. It's not maybe modular, how Tesla's put things together, or maps-based the way Waymo is, which is, So on one hand, it's going to take longer. And many would argue that this is a science project that may never work, and who wants to burn their money, because you're either going to get diluted down, all along the path, or they're just not going to make it because the capital markets at some point will shut for them. On the other hand, it's the ideal investment, because that could theoretically be the end game, that end-to-end works, AI works, and this is the way to go. It's a fascinating one to watch, and I think there's a lot of people that are obviously rooting for them, as they should, because it's just a different approach to this market. And hopefully they can get the funding and get there quickly.
I believe they can. I've interviewed Alex Kendall, their CEO, on the Road to Autonomy podcast, and have a conversation with their team. And I believe Wayve could be a significant player in autonomy. I believe that Wayve is progressing faster than Zoox. If I had to give you the top four: Tesla, Wayve, Waymo, Cruise. That's who I believe the top four for where this technology is going. Who ultimately will succeed in that? I don't know, but I'm very, very bullish on Wayve. If you look at companies that are succeeding, Houston, we've got driverless. You got the Great Icky Pop sign. Houston, it's hot tonight. Houston, we've got driverless tonight. Cruise pulled the driver.
Oh, wow. This is the perfect time, because now you can actually go to Houston and not have a very unpleasant weather experience of high heat and high humidity. Although I guess it doesn't matter, because those Cruise cars probably have wonderful air conditioning. That's amazing. That's great. That is great. That Cruise, everyone, there's been a lot of negativity, I think, towards GM in general. So it's great to see that they've kind of kept at it, and now driverless. Now, am I going to be able to go there and just download an app and use it, or is this kind of closed initially?
Not yet. It's still testing. So it's still early testing in Limit OTD. But to me, if you look at milestones, and I call this phase Cruise 2.0, this is a major milestone. They had other previous milestones. Hiring Mr. Steve Kenner as chief safety officer was a brilliant move. Mr. Kenner Mr. Kenner, he's got 4 decades plus of safety experience, one of the most respected individuals in automotive safety, not just autonomy safety. Building out the safety framework to allow them to get here is a major milestone. I believe, and this is just based on statements that Ms. Barra has made on earnings calls, that we, in the first half of next year, Cruise in Houston will go fully driverless, where you can hail it. The big difference goes back to our favorite topic, Uber. You're not going to have to download a Cruise app. You're just going to open your Uber app. That's the game changer there, because that will allow you to scale. And that goes back to the partnership theme that Waymo's doing. Uber's going to be the connective tissue that holds us all together. Without Uber, I really don't see how all the rides are going to scale. Did you see the announcement that Uber made on X this week, where in Miami, you can get a specific car? You can get a Rivian R1S. So I go back and forth with Uber on X. How far can I go? Can't go out of city limits. Wah, wah. But they're starting to do Pacific cars now. That gets really, really interesting, which opens the doors for mixed fleets. You get to choose the type of vehicle you want in autonomy in Uber. The door's cracked there.
Look, Grayson, I don't know if you're familiar with the app Kayak, which you can search for a flight, and then if you don't want to fly a Russian airline, probably a smart idea, you can check off that box and say, nope, not going to take that airline. You don't want to fly Spirit? Check it off. And you check the airlines that you do want to check. Dara, if you're listening, allow me to do this. I don't personally perceive a Tesla as a black car. I'm sorry that's going to offend some of our listeners that are huge Tesla bulls, but like that is not what I don't find that to be a black car comfortable ride for me. Let me pick and choose what cars I have. I fully realize that that person may not be on duty and I will have to wait 8 minutes if I'm looking at an hour-long ride from the city back up. I realize, but let me pick the model, maybe even the year of the car, just like you do in Kayak. Set up my personal profile, and then Uber can provide me a customized tab that says, here are the cars available for your personalized. Jack me the 20%, whatever you want to pay. The wait is going to be 7 minutes versus 4 minutes, whatever it is. Give me that functionality, please. And, and I will pick autonomy cars first for sure, but then some cars that I prefer. I'm not sure why it hasn't already happened. By the way, Risher, if you're listening, if Lyft does that, I will shift my usage over to Lyft like overnight. There's a differentiating feature. The problem is if Risher does that, obviously Uber will follow very quickly.
Yeah, but it would be a big, bold statement if Risher does do that at Lyft. I would follow for that because I want consistency. Uber's biggest Achilles heel is consistency, and that offers consistency. If I could know the type of vehicle, whether it's autonomous or non-autonomous, that I'm going to give it to him, I would pay a massive premium for that because then I would know it was clean. Some of these vehicles you get into are not very clean. I got into one vehicle. Gentleman said, I'm 90 years old. Oh, geez. I live in Florida, the land of old people. That's what he told me. And the whole ride home from the Fort Lauderdale airport, he's soliciting me and telling me how bad Uber is. And here's his card to call him. And I said, well, how do I pay you if I call you? I only take cash. The hell with everybody. So if I can have consistent experience without being pitched by a 90-year-old guy, when I'm like, oh God, we got something going on there.
Yes, that is once again another amazing Grayson personal story. I think I need to come up with a nickname for those.
You should. On Lightshed, you have Telco Core. On this, we can have Grayson's Wild Adventures. I don't know.
Grayson's Wild Adventures.
Mr. Toad can be the mascot.
When we're at CES together, I'm not sure we're going to share rides because I think you have a very high mix of wild adventures.
I do, but we've learned something. We're not going to use IP that we don't have the rights to, as we saw what happened with Tesla when they used the Dune IP. We're not going to do that. We're going to be very respectful. We're going to have a good time at CES. Walt and I are going to have some fun at CES. I will make an announcement in early November. We got something planned, and we're looking forward to sharing that with you. And tomorrow I'm launching Autonomy Times, autonomytimes.com, which will be your real-time update on all things autonomy and a bigger expansion of Autonomy Markets. Walt, we still have Alphabet earnings coming up. We have Lyft earnings coming up. What do we need to look for over the last week? Because, wow, this was a busy week.
Can I just take a nap after this week? I mean, this week was pretty busy. I can't even think about next week. The one company we didn't talk about this week, which I still want to hear more from, is Zoox. Like, what is going on with Zoox? Do we have any updates from this week? Maybe we'll get a Zoox update next week. Who knows?
The land of missed opportunity is how I will sum that up. And I will continue to publicly push Mr. Jassy to reveal public details around Zoox. If you look at a competitor, for all practical purposes, Amazon is a competitor in various businesses. Let's just use the cloud business, AWS, Google, Cloud Compute. They compete. And they also compete on autonomy. Amazon has Zoox. Alphabet has Waymo. I believe Mr. Sundar Pichai will make an announcement, as he has for the last several quarters, around Waymo. It's time for Mr. Jassy to start making public comments because the public markets want to know. And as I wrote in this week in the Autonomy Economy newsletter, Amazon will have their TCI fund management moment. The time is coming. Investors want clarity on Zoox and the billions of dollars that are being spent with no clear commercial strategy. The future is bright. The future is autonomous. The future is profitable autonomous vehicle companies. Walt, until next week.